Happy Labor Day to the MMTs. Happy Labor Day to everyone in the U.S. and everyone around the world. Because whatever that day is for you, well, today it's right now for us. We have LinkedIn weekly chart. We have LinkedIn $250 regular options, put options, right here before us. Now, why are the MMTs going to buy them and make a lot of money with parts of September and possibly parts of October having corrections that can still continue when prices are at or near their 52-week highs? Not only that, the key Pacific element is, where does that price reversal start to take place? And why do I have the least amount of risk? Remember, the contract was up here on 3/8 of, or 8/1. This contract was at $43.70 on LinkedIn. That was what the $250 put was. It got down here where LinkedIn had put in a 52-week high. Here's the chart on LinkedIn. It's a daily chart in our MMT platform. So here, let's get that box out of the way. Here is the daily MMT platform. We can clearly see where the weekly high reversal made that high on, well, that was simple. That was at 826. Made a high at 247.98. Then it made the low on 827 at 234.68. Then we've come back up in that counter trend to another high of 243.55, which is lower than that high. And this is on a daily level, and this was in the dog days of August. Here's where we had some gaps, and this is back on 8/1. When the dog days of August started, they leveraged that up, managed to make this high over here on 8/13 at the price of 244 with a reversal to 222.22. Now, buying the puts at that time was the right thing, and that's the way that the money was going to print. Now, what we're telling our MMTs and we have various different kinds of people who operate in the markets, but we do have the market maker division and we do have a option pit. And today we're talking about the option pit and why they're going to make a lot of money. And so basically, when we have a reversal up here like that, what we're looking at is a complete reversal from that original high, that any move up toward that 52-week high is that the confirmation is the same daily distribution in a daily bar like this. And it'll be like that on all of them going into September. They have to start to qualify. They've got to start with a daily distribution bar. This one started here, but unfortunately the daily chart, a half a delta, is $2.78 per line in our system. So he stayed within a half a delta movement of $2.78 right here. So basically on the LinkedIn trade, MMT, is that any move up intraday, we have clearly seen on a daily level where it sells down. Now, on a 60-minute level, which we have clearly right here for the MMT, is we always use that 60-minute level. It has to qualify, has to be below the previous 60-minute bar, has to go down in value, has to descend. And it did, and that's its counter rally on a 60. But then, in the dog days, you went from 243 right back down here to 238.4 in our system. Now, one of the things that I'm going to say to everyone is that every gap open up in September volatility, we would be looking at what? Doing the following. The August $250 put regular, and this gives you all the more reason why you need to get with the SMF right now today. Because when you're able to look forward looking at where these prices, where our MMT option pit is, that's our own pit. We own our own our limit orders are proprietary and they're ours, and so we're buying wholesale down here. And when we start to reverse here again, we're looking where the value of the contracts would trade north of $28 over a period of time. Well, we can clearly see that that's a $10 move in the options. So if I have 30 contracts for $10 movement up, no one said that this was going to happen in one day, because we're not saying that. What we are saying is the following. So here, when we go up to challenge these resistance levels, we have to continue to verify and make the transactions accordingly as we start to get the 60-minute reversal. Now remember, these were the dog days of August. We're wholesale buyers down here. These are deflated. We are not wrong on this one, just like many of them on our site. Here on stockmarketfunding.com, you can clearly see that one of the things that we want to point out, this isn't a retail operation, but you can get involved with no experience. No one has to have experience. You click on the options exchange right there. Bingo. And you're in. And you get a 1 free day trial. How wonderful that is. And there's lots of live videos at different times on the options trades that are here. They're all real, just like we're doing right now. So basically, how do I know from a 52-week high reversal on a 60-minute chart? This is of the MMT platform, and it's the dog days of August. But most importantly is that, and remember, this is a $250 put. It's in the money now. But the low of the put, like I told you before, that low over here was $14.35. It's already moved $4 off the bottom. So when you're buying 10 contracts, there's already a $4,000 value from here to here in 3 days. Okay? And it's the $250 put. Now, we will trade monthly, September monthly ones, but I'm not going to go into that right now. What I am going to go in, when you're involved in a real strong bull rally, such as LinkedIn, and it's been on fire, and it's been one of the best performers out here. However, there are times that in September, as we totally forecasted on stockmarketfunding.com, because we did, about what the broader market reversals would be, we also were very forthright in letting our MMT market makers know the directional price movement on lower volume during that month of August. Well, tomorrow's the first trading day of what? September. Here on stockmarketfunding.com, it would behoove you to talk about the stock market correction that was given out before the fact, and why the small cap would go lower, and why the summer rally was over. And this is all done live as it is done here and now, today. And it's everything to know what direction you're going to go into so that you can beat the market. And there's lots of things involved in that. So you have lots of analysis here relative to these moves before the fact, not after the fact. I'm going to conclude that we will be shorting the LinkedIn on any gap open up in the actual volatility of the September price volatility, where there'll be gap up days this month and there'll be gap down days. It's where the reversal of the 52-week high starts to weaken in price. And how do I identify that? Because you have to be right. But most importantly, the most important thing about the other part of it is the $250 put. And when I'm buying down here, everyone that owned them up here at $28, hey, they got taken to the woodshed. Look, right here, $28. Look at how high they were. Then they got wholesale. When I'm buying here as an MMT option market maker, I'm buying wholesale. My risk is out of there. Dollar capital risk has been removed in the volume. I'm buying 30 contracts. I'm saving $30,000 worth of risk from where the public is trapped. Or better yet, what about up here at 42? So I am buying my risk I'm purchasing risk no matter what, but my purchase of my risk is at a much lower dollar level than everyone else. Yes, I said it's a low dollar risk purchase. There's always risk in every element, in every instrument that you're going to buy and sell. I don't care what it is with the market, when you're in the market, or what week it is of the year, there's always risk. But you have to know how to remove it. This is wholesale. So follow forward. We're going to start making the transactions tomorrow morning. We'll build the position. We won't buy all of our contracts at one time. We will give various different price structure levels at the wholesale level, and we'll start purchasing according to our low dollar risk capital purchase with a reversal in price from a 52-week bull breakout in LinkedIn. Is how do we capture the other side of that price in the downside volatility that would happen from the daily chart here. Here is my 60-minute chart. And you can see how they broke it out. But here's the thing. When we gap on a 60-minute bar or a 3-minute bar, 15, it doesn't matter, that we're going to take the short, and as long as it's going like this and the descending mathematical value in the algorithm system that is used in the models of the exchange models, that is that we would be getting short, and if it goes the other way, we'll keep a stop right above it.